unlocking private investment for instant payments. These systems are transformative platforms that can anchor entire digital finance ecosystems. These systems offer investors opportunities for innovation, for market expansion, and also the development of value-added services. Some of the viable and scalable business models include monetizing the core infrastructure. We have fraud analytics and data monetization, credit scoring and digital lending, and also loyalty programs and API monetization. In terms of the supportive and regulatory policy environment that investors look at, one is interoperability policies. They also look at pricing regulations. Data privacy has become a major concern, and also simplified KYC requirements, especially when it comes to onboarding clients as well as institutions. Institutional design and governance. They look for a governance structure that is neutral. They look at, as I mentioned, onboarding procedures that are not too restrictive, and the issue I just mentioned of data privacy. These are some of the concerns. In terms of market readiness and infrastructure, a key component is ID coverage. This supports onboarding, for example. Mobile phone penetration has become a key determinant. Internet access, and also agent network density. In terms of the role public and development partners can play, one is early stage grants, as well as providing technical assistance. The role of a neutral convening role, especially when it comes to interoperability, and you have many different competitors who are coming together to collaborate. It helps when you have a neutral entity that can convene and can anchor the conversations. And also anchoring a client for transactions. For example, the government can be a critical player when it comes to government collections and government payments in terms of providing volumes and scale to these platforms. Some examples, India's UPI, Open Infrastructure, which has government backing and private innovation. PIX in Brazil, which is again open architecture and mandatory interoperability requirements. And Mojaloop in Africa, which through developing regional switches that are scaling cross-platform interoperability and which uses open source software and focuses on an inclusive design. We also have social impact investment potential. You have instant payment systems that offer measurable benefits in reducing the cost of financial services, increasing access for marginalized groups, and improving transparency in government payments. This is an attraction for impact investors. So, in conclusion, what we can say is instant payments represent a transformative innovation in digital finance, offering opportunities to drive economic innovation and financial inclusion, but their long-term success depends on sustainable investments. Funders are drawn to instant payment systems when they are designed for openness, for inclusivity, scalability, with a clear alignment between technical functionality, commercial viability, and social impact. So I will stop there and go to my panel and ask them, I'd promised to start with Fidelis, what his views are in terms of how you attract private investment into instant payment systems.
Thank you, Victor. Very interesting conversation here. If I could give the context of Africa, most of these instant digital payments, especially the ones that are of a national nature that you're talking about, are mostly regulated, number one. So the driver for them is more of a socio-economic development agenda, not a purely commercial agenda. So to that effect, there's a limit to how much the profitability of that particular product can be. Most governments will give you a license, but they will also want to see that the price you are giving for the product is as low as possible. In Kenya, we call it is a race to zero. Everybody is trying to lower the cost to the point where it's almost going to be free, if not already free for some areas. And therefore, the investor who is coming, number one, has to be either government, because they are not looking to maximize profit. Number two, it has to be, if it is a private investor, a very patient capital, because the return on investment will be very, very low. And therefore, if you are to recoup your investment, you are looking at a very long-term investment plan. You're not going to get your money in 2 years, 3 years. So you should be ready to be patient with that money and develop a business plan that you're not looking to get your money in the short term. The other one is looking at what you mentioned, impact investors, where they are not really looking at monetary profit. They are looking at getting some impact in the ecosystem. So if it is social or financial inclusion, then they are willing to put in the money without expecting a specific return on investment. They are looking at getting the impact that they wish, and to them that is the return they are looking at. Now, there are two things that I would like to point out in this particular area. There is money to be made in such an ecosystem, even though we are saying the returns are low. And what they are now looking at is developing value-add services. Instant payments is no longer considered a competitive thing, so it is essentially what in Kenya we call a hygiene factor. Any financial institution that is not offering instant payment is not in business. So all of us are expected to be in instant payment, so that is given. Now, what do you do to layer products? And you mentioned quite a number of them: analytics, value-add, data aggregation, and all these things. A very interesting model in Kenya is they are setting up, for example, Equity Bank has set up a digital payments infrastructure, and they are building an ecosystem around it. So you may have seen they are offering health services, so they call it Afya. Then they are offering, for example, if you are a customer, you are a doctor, they will fund you the medical equipment, they will fund you all that, and then they install their system there and they do the payments across there. Then they look at the customers who are coming there, they'll bank them, and that way they are growing an ecosystem around the investment. And that's the model that everybody is looking at to maximize the value in terms of the return. So you're not going to get your money in terms of cash, but you are going to build value-add products and build ecosystems which through value addition will then get your money back. So that is what I would like to say in the interim, and we can add later on.
If I could come to you, Somaliland is looking at building an IPS. What are the options that are available to you?
Okay, thank you, Victor. This conversation. I think in Somaliland now we are very interested to adopt an instant payment system. On the current ecosystem, we have a separate and standalone payments, which is the mobile money is the largest penetration for almost 80% of Somaliland people have mobile money in their. Some banks now are developing mobile wallets and internet banking. But those systems are working like a traditional, as well as they are not interconnected and interoperable. So what we are in Somaliland, what we are planning is to have an instant payment system that can be inclusive. So all those population, from especially for low-income people and underserved, can participate in those systems. So, as a Fidelis has mentioned, the return on investment on these instant payment systems is low, as well as it takes a long time. So, what I was concerning is that the cost of instant payment system is huge, and it's coming from mainly two main areas: the initial implementation cost, which is the infrastructure setup, security infrastructure, system integration, as well as testing and certification. There's one huge investment that needed for to deploy initial payment instant payment system. Then there will be an ongoing operational cost. So those IPS, instant payment system, to be inclusive for all the people, it will be good to create a public-private partnership, so that a co-investment in the infrastructure, the initial capital expenditure, has been financed together by the government as well as the private, so that this will make the reduced transaction as well as a lower barrier for entry in IPS. So in Somaliland, we're trying to establish an instant payment system that can serve low-income people and unserved population in Somaliland currently.
Moving to you, Moses, as KPMG East Africa, what would you recommend?
All right, thank you very much. Just by way of introduction, my name is Moses Kipchirchir. I'm a partner with KPMG in East Africa. And on this topic, I just wanted to look at it from the lens of risks that, private investors would be looking at. And that would really be barriers to entry, and some of the ways in which governments or players in the industry can help lower those barriers. I think the first one, and I think has been mentioned across, is policy and regulatory risks. This is an industry in which you have to contend with fee caps. As you said, there is a race to the bottom on the fees. Sometimes those are regulated. We have to contend with the use of a lot of personal data, so data residency laws which change from time to time and have implication on depending on what country you work in. There is also AML, KYC laws, a highly regulated area. So it does not help if those laws keep changing from time to time. It becomes quite an issue for private investors. And it doesn't help if there is uncertainty around those laws. So one of the things that countries can look at is countries that succeed actually have a roadmap, an IPS roadmap that gives certainty on regulations and the direction that we're taking for IPS. We should also look at developing regulatory sandboxes that will allow players to be able to experiment and engage in that context. We do know that we've got East African Community, we've got ECOWAS, and each of these countries is going to have their own laws on data residency, ML, and the rest. There is need for harmonization as well to create an industry in which there is certainty if you're running your operations across those countries, and allow stakeholder consultation. One other risk is, and I think Fidelis touched on it, is the business model risk. As we said, it's a race to the bottom on fees, and therefore we have to look at what other services are going to be attractive to private investors. Monetization of data, the data that you would get within an IPS is very rich. You can use that for fraud scoring, for credit scoring, all sorts of ways in which you can monetize data. Of course, you can look at that against data protection and be able to navigate those issues. But creating alternative revenue streams where you can get value from that beyond just margins on the transactions, I think is a way to look at attracting private investors.
Thank you, Victor. So the issue of private investment within instant payment systems is largely influenced or perhaps determined by the level of, and someone mentioned it earlier on, regulatory certainty that the government puts in place. Now, regulatory uncertainty is almost by definition, is an inherent risk that all private investors in this area will face, because governments change, legal regimes change, and even political considerations, because IPSs operate within a political context. So the safeguards that private investors would require to invest in IPS systems often are not, cannot be guaranteed, so to speak. So the way the way they would then address that is, if the government chooses then to provide an IPS as a public good, but provide an underlying or put in place an ecosystem that enables then the private sector players or investors, perhaps not necessarily to initially invest, but more or less to take advantage of perhaps either the data that's generated or the widening and the deepening of the financial sector that an IPS puts in place, I think that would be a win-win for both of them. So that way, I would call it maybe perhaps the execution risk of an IPS is not fully borne by the private sector, it's borne by the government. But the ecosystem created, it should then be able to enable the private investors take advantage of either data or the widening and deepening of the financial sector that would arise. Thank you.
Concept of the rails and the trains maybe that you run on the rails, and public good and private good. I just thought maybe starting again with Fidelis, what would your thoughts be on exactly what I think Dr. Titi was referring to? Should government be the one to invest in the infrastructure and then the private sector to come in and invest on the wagons that run on those rails?
I think that is the best model, because if you look at a private investor to invest in your rails, then most of them will ask for certain guarantees to ensure that they get their guaranteed return, so to speak. And that will invariably then mean that the operating cost of that infrastructure becomes very high. So we are really looking at government to invest the same way a government can invest in an airport, on roads, and then people can buy the cars and drive on the roads. So for digital payments, the infrastructure needs to be invested by somebody who's not looking to maximize their returns, so that it can be as low as possible to ensure that barriers to entry are not put in. For example, if a corporation came and set up a digital infrastructure in a country, then they might want guarantees from the government that they will decide who will play on that infrastructure, who will be allowed in the infrastructure. They might say, you cannot do certain things because that becomes my purview, so that I'm guaranteed my return. And therefore, it actually kills the innovation that we are looking to develop. So if the government puts in, then they can say, okay, to the extent that the government will guarantee for you to play, here are the rules that are universal for everybody. These are the rules for you to play here. These are the requirements. And then let the players innovate on, to your point, the wagons and the vehicles that drive. So they can then put speed limits, they can put traffic lights, and they can put whatever they want. But the players are left to then innovate on products and services. And you will see a lot of enhanced use of the infrastructure to the benefit of the economy. That is what I would say.
Abdi Fattah, is this something you'd consider for Somaliland?
I agree with Mr. Felix that the best model is to initially invest by the government, then the private can manage and run those instant payment system. Also, the government will provide support for those systems in terms of innovation, promoting innovation, hubs as well as sandboxes, as well as promoting the adoption of instant payment systems by different financial service providers in Somaliland. The government also may promote international cooperation for cross-border payments. So from Somaliland perspective, it's the best model to initially invest by the government, then running by private for innovation as well as for sustainability.
Yeah, I think I also need to add that when you did your presentation and you had some statistics there about internet penetration, mobile penetration across Africa, and some of those numbers are in the 60s, others are in the 80s. And scale is where you start to see benefit. In some countries, there is still work to do in terms of inclusivity, getting to everyone. I think that is a role that government can play to continue to expand the reach for mobile access, internet access, and so on and so forth. Then, everyone is using the instant payment systems. There is a larger pool for which the players can play. There is more that we can do to reach people. And I think that's how, it becomes attractive to private investment. Because you now have a population of 20 million, 30 million, for which you can take any product to, quite attractive to any private sector player.
Dr. Titi, my question is, what are your views on a differentiated pricing model, where, for example, for low-income population, you offer free transactions, but you allow the investor to charge those who can afford a certain fee that more or less compensates for some of the free transactions that they are offering to the low-income population?
My thought on that, and I'm saying this as an economist who subscribes to the Austrian School of Economics, the idea of free introduces its own set of problems. Because if one group of people is receiving the service free and others are paying for it, you're going to have a situation where some are going to find a way of getting the free services, which then defeats the purpose. So instead of them focusing on innovating, they will focus on innovating to enjoy the free services. That's why my initial comment was, if we should begin to look at IPSs as public infrastructure. Okay? Let the government put in place the ecosystem, the rails, so to speak, and set the rules for those who want to benefit from it. Now, there might be entities that are focused on social impact that will say, look here, we intend to provide services to a certain group of people or a certain demographic, and we'll make them free as long as you qualify. Okay? There are those who say, if it's for commercial, you'll pay. I'll give you an example. Everyone in this room at one point or the other has used YouTube. Okay? There's YouTube that's free. It's just that you suffer the inconvenience of ads. But there's YouTube for which you pay a small fee and you don't have ads. All Google did was put a platform and then decide, you pick which one suits you. Okay? And I think if governments do that, then the private sector players, whether they are focused on impact, whether they are focused on growing their potential customer pool, will then design products in a way that either provides the service free to some or to others. That differentiation should not be done by the person establishing the infrastructure. It should be done by the private sector, and I think that's where their role would be. Thank you.
Yes.
Yeah, I like that point about YouTube. And I'll say what I say to my children all the time as well when they go on the internet. They say, they found this nice new thing and it's free. And I said to them, if it's free on the internet, that's because you are the product. You are being sold. You are being sold. I have a question for the panelists as well. Just, do you think that a solution like Mojaloop, which is open source, and that is different to getting a BCP solution or ACI World solution? Do you think being open source or not makes a difference in the grand scheme of how this works?
Yes, I think it does, because for the entity establishing the infrastructure, in this case, we all seem to be in agreement it should be the government or some quasi-government entity. It means that it has the ability to create, design, or remodel the infrastructure in any way it wants, without having to worry about the issues that come about proprietary, IP that is embedded in some of these products. That's one. Two, we have seen that increasingly IP has been, this is the attempts to kind of weaponize it. Okay? So then the question then becomes, for those countries that are looking to put this infrastructure in place, if you're going to rely on tools for which tomorrow someone will decide that for whatever reason, and Uganda is very unique on this one, where we passed a law some time back which seems to be bringing us problems. You have a situation where you might be restricted from being able to use that infrastructure. So it becomes a white elephant because, like I said earlier on, governments change, political decisions and positions and outlooks change. And then down the road, those that you aim to help will suffer for decisions that have nothing to do with the service that they're supposed to be enjoying. So with regards to your question, I think open source solutions are the best. And I think should be widely promoted for these IPSs. And if it's done by government, the private sector has a very clear role. The government set it up, set up the rules, of course, establish the rules, and have a mechanism of working with the private sector to constantly review the relevance of these rules, and then sit back and let them do as their needs and the funding requirements require them to do. Thank you.
Let me just make an illustration to answer your question. When we were setting up a switch in Kenya, all the vendors who came to bid were bidding and they were putting a price. And the price changed based on how much you are going to use the switch. There is a vendor who told us, we'll give you the software, this is the price, and for that price, we'll give you up to 500,000 transactions per month. Then when your volumes go beyond 500,000 transactions per month, then your price will change and we will now up the price slightly. So you end up looking like you're paying rent to run your system. That's number one. The second thing is when you want to change the system to customize it to some unique situation, then that is where they were making the money. So we ended up buying a software we thought was very cheap. But then now once we got the software and we told them now we would like to do this, they tell you, okay, first of all, we need to set up a project. The project will cost you $60,000 for the project manager to come and do something like requirements and a business case. Then the cost of the change will be this much. And some changes they said, no, you can't. Because that's how our switch is. You can't do that. Sorry, you have to work with how it is. The value that Mojaloop gives us, number one, is the software is made by the community that is using it. So we decide what we want. We tell Mojaloop we would like to have Hakikisha. So they ask, what do you think Hakikisha should do? And we tell them. So by the time the software comes, it is serving a need that is already identified and clearly articulated. That's one. Secondly, if I pass one transaction and I pass 10 million transactions, the cost to me is the same. So I'm not limited by budgets because I don't have to go to my board to say I need another $300,000. So those are the two values I see in the Moja Loop solution. The other one is when you now start doing cross-border transactions, the value that Moja Loop brings is that beyond the software, we get to know each other. So if Kenya and Uganda are going to do some transactions cross-border, by virtue of us meeting at the Moja Loop community, we are able to discuss issues pertaining to market dynamics in Uganda, in Kenya, in Rwanda, and we can actually develop solutions even before it goes to the policymakers for approval. We already know this thing is working. That's a very big value that people don't know that Moja Loop delivers. Because if, for example, Kenya was to come and start discussions with Ghana today, and we've never been meeting, I first have to develop a rapport. I first have to understand what your market structure is, your rules, and sometimes I get no appointment. Can't get an appointment. But today, if I want to see doctor, I'll just say, hey, we met at Moja Loop. Can we have lunch? And it is very easy and things move. So I think those are the values that Moja Loop brings to the community, and we should enhance it so that when we are now looking at developing this ecosystem further, we are actually building something that works for everybody. Thank you.
Thank you. Thank you very much.
Closing remarks. I think I'll put it this way. IPS should be public infrastructure. And provided as a public good. But there's a caveat. The provision of that infrastructure or that public good should be done in collaboration with the private sector. Okay? It shouldn't be government doing it as a vanity project because others have it, we must have it. It should be done in collaboration with the private sector who, more often than not, are already aware of significant gaps within the industry that they seek to address so that the infrastructure actually helps them plug those gaps. That's one. Two, on the matter of cost, I think, and governments around the world have demonstrated their inability to price correctly. Again, the private sector should be allowed to determine that. Because subject to the scheme rules or whatever rules are put in place for you to access and use that infrastructure. But the pricing, if there is going to be any, should be something that the private sector establishes so that they can get to more or less stratify the potential pool of customers or users and decide who wants to serve which segment. The only downside to that is that it is also, again, you might end up with a situation where certain customers then get excluded, okay? And that is where now the government that has established infrastructure then puts in place some kind of incentives. I'll give an example. And this is not necessarily within payments, but around telecoms. Because I happen to have worked with the telecom regulator in Uganda for a number of years. At the time of renewing the telecom license for MTN in Uganda, there was a decision where we realized that there are certain areas that MTN was not providing coverage in because it didn't make economic sense to spend $300,000-$400,000 setting up a tower, and you didn't have customers within that coverage area for the cell tower to justify its operational cost. It's OPEX. Forget about the CAPEX, but it's OPEX, right? So one of the license requirements at the renewal was, we are going to give you a minimum coverage requirement. You figure out how you price it, okay? And if this is done for 2 or 3, trust me, the private sector is quite innovative in figuring out how to do this. Maybe they have the capacity to absorb a loss at a cell tower for the first next 3-4 years on the grounds that thereafter they will be able to recover the initial costs. So that would be my parting thoughts on this matter. Thank you.
All right. I think my parting shot would be, especially in regards to this topic, is we must not lose sight of the initial overall goal of setting up the IPS. Everything that we do, we should ensure that it then does not create a two-tiered system where, you know, those in urban areas have access and maybe those in rural areas do not have access. So keeping aligned with our original goals, even as private sector becomes a player in a big way in IPS.
Thank you, Victor, and the fruitful discussion on this topic. To my conclusion, I would like to say that to be sustainable, the private sector should be part and participate on those instant payment systems, where the regulatory and the government should establish a clear legal status of instant payment system, as well as a clear rules, obligations and rights of the participant of those instant payment system. The second thing I would like to emphasize is that to promote the confidence, trust, the regulatory and the government should adopt a risk-based supervisory role, as well as to promote fair pricing in these instant payment systems. For the case of the use of open source, I think it has a great impact and implication. It substantially reduces the initial cost, which promotes the inclusiveness of instant payment systems, and also it creates an enabling environment and a test of ownership to be sustainable in the future. So an open source platform like Modulo may have a significant impact on the inclusivity and sustainability of instant payment systems.
Yes, thank you. I don't want to repeat what has been said. So the value of government as a driver for public policy and ensuring that inclusivity of payment is able to reach everybody is an important aspect for that. The Moja Loop community can bring value by holding all the players accountable to that mission. By number one, they have access to the regulators, they have access to the players, and they can be able to then point out areas where we need to build and where we need to actually step up to the plate. So the value that the Moja Loop community can come in is to engage government and private sector to tell them, you are doing very well here, but we need to improve on this area, and hold us to account, because government is normally about controls, policy, and driving policy. Private sector is about profits. And so if all of us, government and private sector, focus on our core businesses, somebody else needs to hold us to account on the bigger picture to say, inclusion, this is where we are needing to come together and bring us together to be able to look at it from each other's perspective. So that's what I would say.
In the interest of time, on that note, we will close. Please, a round of applause for our panelists. Thank you so much. Thank you so much.